Good morning and welcome to today's 5 with Fitz. You know, the markets strike me as a lot like an old country dance tune right now. Rates down, stocks up. I bet if we played them backwards, the truck would run, the fields would plow themselves, and the dog would come home too. Anyway, all joshing aside, I actually love country music as much as I love the markets because, frankly, there's plenty of music and money to be made at the same time. Here's my playbook. 1. How to beat inflation with bonds. Now, Wall Street would have you believe that bonds are the enemy when it comes to rising rates. That is not necessarily true if you understand how to make the right choices. Here's one investment strategist using a page straight out of my playbook, and I love what she has to say because it matches up so precisely. 2. Government shutdown relief rally or something else today? I'm in the something else camp myself. We knew coming into the month that September would be rocky, and the markets have certainly met their billing. Today's action, in the early going anyway, strikes me as nothing more than a quarter-ending, volatility-induced rally. Boy, that's a mouthful. Traders and investors are starting to window dress as they head into Q4 when bonuses hit, and clients, of course, expect answers. Do not get sucked into questionable stocks. Quality and liquidity matter, and they should be where you concentrate your money and your efforts. Take Apple over Uber, for example. Costco over Bed Bath & Beyond, which is getting clobbered in pre-market trading as I record this after reporting lackluster results. 3. This is long overdue, but not enough to make me want to buy the stock. Lowe's is apparently going to roll out a first responder discount program nationwide from October 22 through the 24th. The company has offered veterans discounts for years on an ongoing basis. The chain can and should do better. Lowe's, why isn't this permanent? 4. Avoid these stocks at all cost. Dollar Tree is going to be selling a lot more stuff priced for more than $1, citing higher production and transportation costs. Next up, buy now, pay later models, at which point the consumer is totally hosed, even at $1 level an item. Not for nothing, but the Federal Reserve is probably going to still insist that inflation is transitory. This calls into question so-called bargain-oriented retailer stocks in my mind, like Ross or Kohl's, for example, which recently got a double downgrade. The worst mistake an investor could make right now is to own the rest when buying the best is what's going to get you through this mess. 5. More doom than boom in China these days. Chinese business activity is slowing, and even the normally massaged consumption numbers put out by Beijing's Ministry of Propaganda don't pass the sniff test. The Purchasing Managers Index, for example, declined from 50.1 in August to 49.6 in September, while there are widespread power shortages being reported. Consumer confidence is stable according to the powers that be, but manufacturing shrunk. Something doesn't add up. I continue to steer clear of Chinese stocks and will for the foreseeable future. Bottom line today, can a retail investor compete with the pros? I get that question a lot, and the answer is absolutely yes. The trick is picking battles they have no interest in fighting and using tactics they can't counter. If you know what to do, that's totally awesome. If not, and you'd like a little help, I'm here. As a matter of fact, I will be sharing 3 brand new recommendations to do exactly that, drawn from my latest research this Friday in the next issue of One Bar Ahead, including a $3 stock that could be the next internet gold rush. But again, no pressure. I simply want to be the guy who helps you get to where you want to go. You got this, I promise. See you next time, and thanks for watching. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.